Late adopter. Hi guys, how you doing? Welcome to the Bitcoin Daily, 9 a.m. Central European Time on the dollar. We do the show every day, Monday to Friday, because we gotta know what's happening in Bitcoin, altcoins, and everything else, of course. Right now, Bitcoin is having a little bit pullback towards the upside. Is this the top? Are we gonna continue inside back above this line that you see on the screen right now? Are we gonna bounce up, explode towards the upside? It depends to be seen. It depends to be seen. So, we're gonna talk a little bit about that. How's everybody doing in the chat right now? Let's see here. Captain is first in the chat. Hi, Captain. How you doing? Thomas Lee and Bull. Thomas is already bullish. Nice, very nice. Mladen is in the chat always. Linda from UK. Hi, Linda. How you doing? Johan von Morik. Good morning, man. From Greece. S. Good morning. How you doing, S? Captain Phantom Near and Bitcoin longs here. How about y'all? Nice longs on Phantom Near and Bitcoin. John, morning all. Vanalesva, legends. How you doing, man? Wait. Good morning. How you doing? Lars Missen. Good morning from the Netherlands. Toxic. Good morning. How you doing, Toxic? Captain is in Florida. Oh, that's nice. Ben, morning. How you doing, Ben? What's up? Very early in Florida or late, depending on the perspective. Mladen. Tyrid likes Utro. Great timing. Yeah. 9 a.m. Central European Time is great timing. But we are a little bit late. I had to do stuff, before this. I hope we bounce. We already bounced. So right now the question is, are we gonna stop bouncing, or are we, gonna go down, or what's gonna happen, right? That's the question. Hi Goom, how you doing? Damian, yo, what's up, Damian? Watching from Guatemala. Nice. I didn't know they had internet in Guatemala. Nah, just kidding, man. I'm irked that I sold the Matic Pump too early. Oh man, you won't believe what I did with Ethereum last night, man. You won't believe what I did with Ethereum last night. Cruzy dude, good evening from New Zealand. New Zealand is nice. New Zealand is nice. Vinet, how you doing, man? I have stand-up meat now. Very bad. Stand-up. What kind of meat is a stand-up meat? I just joined on the intro. Very nice. On the dollar. Greetings from Bali at Tank Trip. Hey man, how you doing? So guys, how do you like the bounce? Are you thinking that Bitcoin is gonna go back to 100k again? What's gonna happen? So Bitcoin over here, of course, as everybody knows, we broke the trend down here, the trend towards downside. We broke that and increased the speed, more fast towards downside over here. Once we broke this line. Yesterday, I'm a little bit unsure how well on the dollar we were yesterday. I don't know if you remember. Yesterday we had a live stream around this point over here, give or take. And I was actually not expecting as big dump as it was actually. I was expecting, maybe some kind of dump down to, 20.8 or something like that before we actually go back and retest these lines on top, right? So, yeah, maybe I was a little bit wrong on the move, but, it came pretty close. It came pretty close. I thought maybe even this over here was it, and we are going to just go towards the upside. But we did, in fact, go a lot more towards the downside. We held this 20,008 level on the downside down here, and we bounced off of that. So right now we have a very nice bounce towards the upside, hitting this 50 moving average, but more importantly, it's not the 50 moving average on the 1 hourly, it's the trend line over here right now. You can see right now that we are actually breaking that, but there is still 42 minutes left on the 1 hourly time frame. Are we actually gonna break up back inside this wedge over here and continue towards the upside or not? That's to be seen. That's to be seen, because right now I do not know what's gonna happen next. This is a major resistance over here that needs to be broken. How bullish or bearish Bitcoin is, that's very much depending on Bitcoin. You can see here it is very nice trend line up here, give or take this week up here, but these weeks up here very nice. Confirm that this move over here right now, it needs to be broken. So we got also 4 hourly right now close in 41 minutes, 1 hourly closing in 41 minutes, 4 hourly closing in 41 minutes. So a lot of these closes are happening in 41 minutes. Are we gonna actually manage to close up here or not? That depends to be seen. On the other hand, we are already on the 4 hourly above the 10 moving average, which gives us a little bit bullishness, and I think there might just be a chance to go up here and maybe even break towards the upside. But maybe, just maybe, what I think is more likely is maybe break, then right back down again, then, you know, use a candle or two up here and then break it on the upside, because this 20 moving average is a little bit extended towards the upside over here. So, you know, just a big move up there, I don't think that's gonna, you know, be that. So if you just wait a little bit more up here until this 20 moving average come a little bit more down to us, so maybe some kind of down move and then maybe a move above the 20 moving average, now that would be very, very bullish. This can of course as well just continue pumping towards the upside. I don't know how this actually gonna play out, but we already know, like, you know, 20 moving average. I gotta tell you something, guys. You see this blue line? I never talk about blue line. I literally never talk about blue line. This is 100 moving average, and you would assume that it has some kind of importance, but I don't know on what kind of time frame it has importance, because you know, I talk about 10 moving average, 20, 50, 200 move, but very, very rarely do I talk about 100 moving average, because I've seen, you know, and I've been doing this for a long time, I've seen that 100 moving average for some reason is not that well respected. You know, it doesn't matter, the 50, the 20, the 200, very well respected all time frames. 100, for some reason, I don't know why, it's not that well respected. 50, maybe 20, 50 and 200 are the three most respected, you know, moving averages. 10 moving average gives a very good indication as well, but 100 moving average, I have it always on the chart, but it's like it's never important level of resistance. So right now you can see here, you know, it's right here at 21.5, but it's just not respected, you know, any way, shape or form. So that said, you know, although we are right now with 21.5, I would still consider the 20 moving average being more of an important resistance than actually 200 moving average. And of course the 50 moving average up here, this is all on the 4-hour time frame. Of course we got a, you know, horizontal trend line here at 21.8, so I think we got some kind of confluence up here, you know, first around 21.8. so if you do break back inside this channel up here, 21.7, 21.8 seems to be important level of resistance. Now the first level of resistance of course is the trend line, but the second is all the way up here. That said, this move over here, from what I can see, and you know, the best I can actually draw, and the best I can see, I think this is the line. So this was some kind of falling wedge on the downside that we broke towards the downside. What you're gonna see here is something very, very nice over here. Not actually very nice. Why? What? Yeah, that's the 4-hourly. That's the 4-hourly 50 moving average. Doesn't matter. Falling wedge, we broke out of this falling wedge towards downside. We had this nice move towards upside. Now if we do break this back inside wedge, the way I see this actually playing out is we're gonna try to, you know, get back outside of this next resistance up here, because we went down here, we gathered a lot of sources, a lot of people went long, or a lot of people went bull over here. So right now we are trying to break in and break this level of resistance. If we manage to break in here, we are gonna test this resistance up here. You can see here very nicely that it corresponds very nicely with the resistance up here and the 20 moving average. 20 moving average will come a little bit back on the downside right now, you know, but over here, you know, it's gonna be something like this. So this 20 moving average will be actually down there, but you can see that the previous resistance over here, the previous horizontal support is around, you know, where we can actually hit it. So we can hit both this resistance up here and the trend line at the same time. So there is some kind of confluence up here, but we will definitely if we break back inside the triangle, sorry, falling wedge, we will definitely test the upper limit again. Now if we manage to get above up here, that's going to be very, very bullish, and then depends, you know, how high we can actually go with this bullishness, right? On the other hand, now since we did go all in downside, if we get rejected from this point over here, we might just, you know, rebound and get out of the falling wedge again. That will be very, very bearish moves. So if you go all the way up to the resistance, we get rejected, we go back down there, that's a very, very bearish. And as soon as we break this level down here at 20.7, as soon as we break previous low 20.7 on the downside down here, this is gonna drop like a stone towards downside. So if we fail to right now, so right now what's happening, it's a bounce, it's a test of the resistance. Is our resistance is real or not, right? So we broke the support. Right now we test as the resistance. There is no resistance here. We're gonna retest this resistance up here. If there's no resistance, we go towards the upside. But if any of these two resistances do fail, and we do hold and we go back below these levels on the downside, this level actually on the downside, let me just draw it down here very nicely. If you go back below this level on the downside again, that's gonna be very, very big drop on the downside. So, you know, right now it's not, you know, we can't just, you know, suddenly for some reason right down again. I mean, technically we can, but you know, it will slowly go down here. Even if it comes some kind of fast drop, it will come fast drop down to, you know, 20.7, and only after some kind of consolidation, only after some kind of slow move towards downside, will we actually, you know, drop big time towards downside. So I don't see right now, you know, any kind of big, you know, fast move towards downside, anything like that, right? But we need to test the resistances. This is one, this is the second. We need to test these resistances. Every time we break this resistance, we become a little bit more bullish. We need to break both of these, you know, to actually become bullish again, because right now we are actually bearish because we broke the falling wedge towards the downside, which is very, very bearish. And if you right now, you can see here, we even pulled back below the resistance. Right now 35 minutes left to go. So if this indeed fact closes below down here, this is actually going to be very, very bad. Now when it comes to, you know, trading and shorting and longing and stuff like that, right now it's not time to be longing. Longing was down here because we went down to some kind of support down here, doesn't matter. Right now we are bouncing, we are hitting resistance. Resistance is always shorting options, they're not longing options. We are not longing and hoping this is going to break towards upside. If it breaks in, we are longing the retest on the support, because if it breaks the, you know, on downside, so you know, long the support, short the resistance. Right now we are below the resistance, so this is actually a shorting option, but it depends whether this actually holds or not, right? We can definitely go into some kind of small time frames. This is actually climbing slowly towards the upside. You can see how nicely we are right now testing this resistance up here, almost on the dollar. Here's one time when the 100 moving average is actually in play right now, but over here the 50 moving average right now is acting as a resistance on the 1 hourly time frame, 4 hourly time frame. Up here we come into the resistance, so we need to see how this is actually going to play out. We might be trading this in a while. There might be live stream just after this stream. There will be 410 million challenge once we're done with this over here, of course. There was no live trading yesterday, but I did do a trade yesterday, and you know, I think it's funny, so I want to show you this, and I want to show you how professionals do it, because I don't think you understand. You think maybe, you know, professionals, you know, buy the bottoms and sell the tops and stuff like that. Nah. You know, I'm professional. I'm like the god of the trading. And, you know, this is how you do it. First of all, you buy it on the bottom, of course. Not all the way at the bottom, of course, because we don't care, you know. We see the bottom and just click buy or whatever, right? We bought on the bottom down here very, very nicely. This worked out very nice. And my target was actually all the way up here. This yellow line up here at 14K, that was my target. We had a nice pump up here towards the upside. I was like 14% up. It's good, you know, nothing bad. I need to let it go, you know, I need to let it go. It's the bottom, it needs to bounce, whatever. It's all good and dandy, right? This is a 1 minute time frame. There is a reason I'm showing you 1 minute time frame. Now, once we bounced up here towards the upside, got some kind of double top up here. This was extend, smack, hug, dump pattern over here. I saw that, but I was like, yeah, but it's not gonna go back down there again, you know, for whatever reason, right? Now we had, this is the first bearish signal. We hit first resistance, but this first resistance was very likely to be broken. This is actually 10 moving average on a 1 hourly or 4 hourly time frame, something like that. I don't remember, doesn't matter. But it went down here, it went inside this, you know, channel towards the upside. This was some kind of bear flag, right? This was a bear flag, and I was like, oh man, it's a bear flag. So I was like, you know what, as soon as it actually breaks out of the bear flag, I'm gonna close position, because this is, you know, going back down to my room, and I'm not going back in, you know, back to zero again after being up 14% plus. So you see this move down here, you see this very move down here on 1 minute chart. It came all the way down here to the bottom, and that's when I actually sold and closed my position. And that's how pros do it, man. As soon as we see some kind of, you know, warning sign, a bear flag or whatever, right? On 1 minute chart, we close position, and of course, as soon, a second after I close the position, you know, the move happens. The move happens towards up. Like if I had like, I wish I had trigger anxiety last night. Like just for like one more minute, trigger anxiety, we would have been back inside this, you know, this bearish bear flag towards downside. We would be back inside the bear flag, and I would close position. But you know, I could not wait. I was like, nah, I'm not waiting, because it did start a little bit go towards that. I actually, do you know what? I actually think I actually sold on the second week. I actually sold on the second week down here, because I saw the red candle, and then I was seeing this other red candle, you know, building down here. So I think I sold the exact bottom down here, right over here. That's what I saw. That's what I saw. So you can see, guys, professionals, we know how to buy the bottoms and sell the bottoms as well. And you can see what happened after that, of course. But it was not nice trade nonetheless, and I know a lot of other people in the chat did get nice moves towards the upside. But it was one of these things that what I felt that Bitcoin need to bounce towards the upside. So it did play out a little bit like I thought it should be playing out. But you know, the lesson to be learned: don't trust the patterns on 1 minute chart. If you're looking on 1 minute chart and you get some kind of breakout or some kind of pattern, at least wait a minute or two to see, you know, some kind of some kind of pullback, some kind of retest, something, you know, because I didn't even wait for the retest. I was just like, I'm out, you know, I'm out. So, you know, we gotta wait for some kind of retest, something like that. Next time to be, you know, to confirm. It doesn't matter, guys. There will be new trade today. We will do the 400 million challenge. The account that I'm trading on is actually TFN's club account when I'm not live streaming. On the live stream, if I trade, it will be the 400 million challenge account. So we all 400 million challenge account is always, you know, live. So every single trade will be live. So we might be actually shorting up here, betting on the rejection up here, or if in case it actually breaks towards the upside, we might be betting a rejection up here around 21.8. So it's gonna either be you know, we either gonna bet on rejection at 21.3 or 21.8. We're gonna see some kind of altcoins, maybe some altcoins has some kind of better you know, patterns that are more bearish in nature than this one. Beside that, you know, so we're gonna see. Don't trade 5-minute patterns. Now 5-minute patterns are okay, and 1 minute pattern are okay, but you need to wait for the, you know, you need to let it go a little bit, I think, after that. So let's see if you know, chat has any guys questions. Any questions? You and I are the same, brother. Yeah. Because people are hooked to doctrine. Why would someone care about fiat value since crypto will replace it? Crypto won't replace the digital currencies. CBT. I don't know. Maybe it will. FOMC plus FOMQ or FOMQ. I don't know what you said. By the way, yeah, today is Wednesday, guys. Today is the FOMC meeting. So we might have some kind of pump dump. Let me show you here what happened on the chart, on 1 minute chart up here. Can we see this on the? I think we can see it better on the. Let's just clean up everything up here. And there we go. What you're gonna see here, we had like very volatile movement up here. Even if you see, let me show you something, guys. Let me show you something. Right up here, you know, this was still 1 minute time frame, but you know, it can happen on bigger time frames. As soon as we had the 4-hourly close, volatility kicked in up here, big time volatility. So it went up, down, up, and then down again. So yeah, you know, this move up here, and this has been a very common move for a long period of time. You can see up here as well. You can see it up here as well. You can see it up here as well. Go up, down, up, down, up, down. Like it's very volatile moves, right? Up, down, up, down, up, down. So I'm expecting something like this to happen once we actually have this FOMC meeting and once the news comes out and whatever people react to the news and whatever happens, right? Once this happens, actually, I actually expect this to happen. I actually expect, you know, the price to be a little bit more volatile and, you know, try to fake us in both directions, not just one direction. I expect a fake out into both directions, you know. So it might be something like, oh, we're going up, oh no, we're going down, oh no, we're going up again, oh, it was a fake out, you know. It might be, and it might be other way around. Oh no, it's bad, oh, it's good, it's going up, it's bad. You know, it might be a fake out towards both sides, so, you know, be careful about that. There will be, of course, this, you know, Fed meetings have been talked about for a while right now, and I don't know when the Fed meeting is actually gonna go, but expect volatility, expect fake outs, expect that people will, you know, think, you know, because it's whatever they say, unless people are expecting 0.75% interest rates, and if that's you know, if that becomes the reality, then they're gonna, you know, try to listen to the whatever he says on the press conference about the state of economy and stuff like that, and then there's very subjective opinion of the people whether that's good or bad, right? So people, if the price goes up, people justify that somehow that's good, and if the price goes down, people justify that somehow what he said is bad. So we cannot actually bet on the direction. If we get 0.75 is priced in already in the chart. But if we get more than 0.75, like 1%, that's gonna be extremely bearish. We're gonna dump like a dump truck. On the other hand, if you get 0.5, you're gonna pump towards upside like moon, right? So those are the two options that are more likely to be very the way I see it. They are likely to be very good indicators in the direction. If we get 0.75, the press conference, like I said, is very subjective, and you know whether that's good or bad, and the price can actually go up and down, and we don't actually know which direction we're gonna go. So there is that, you know. So, but you know, the Fed meeting today might be very interesting, and the moons, of course, and the moons. How could I forget about the moons? Let's put up the moon chart up here, guys. Today, where is the moon chart up here? Oh, this is 1 hour. Let's go to the daily time frame. There we go. We are right now getting our next new moon. See this up? These are new moons. Also, the dump moons down here are full moons. Also, pump moons called pump moons. Pump moons pump us towards upside. Dump moons dump us towards downside. You can see that this dump moon over here did actually push us only sideways up here a little bit. This one up here actually pushed us a little bit towards downside. But this over here pumped us big time towards upside right now, right? Or over here. So this is already starting to work right now. So we like the moons. Now, there is one thing you have to remember. Although we are getting one of these dump moons right here tomorrow, not today, tomorrow we are getting one of these dump moons towards upside, so we are expecting more dump towards downside. In bullish markets, guys, the dump moon is actually going towards upside. If you see we would say, you know, divergence. If you see divergence between the new moon and the price up here, that's extremely bullish for the price in the long term. So the sentiment, you know, the new moon is not being able to affect the sentiment that much, and we just might pump towards upside. These two moons on the downside are called supermoons. This was the June supermoon. This is the biggest supermoon of the year. That's July 13th supermoon, and right now we're getting the last supermoon of the year. That's in August, 12th of August, something like that, 12th, 13th of August. This is the last supermoon of the year, and these three supermoons up here are gonna form the bottom of the price, of course. So we are expecting that this accumulation phase up here plays, but you know, the accumulation phase hasn't lasted that long. Right now, 39 bars up until, you know, 13 August is something like, you know, 2 months. I'm expecting, you know, I said I expect between 3 to 6 months accumulation phase. So you know, we're gonna see how this actually you know, goes up and down, and how long accumulation we're gonna have. But you know, by all the indicators and all the stuff that I can see on the charts, you know, this accumulation phase, guys, this accumulation phase, very nice moves. It's not about what people think, it's about whales. Yeah, but whales also, you know, think, got a brain, so they do think. And then GDP numbers is tomorrow, right? I don't know. 100 BPS is priced in. I don't think 100 BPS price. 0.75 is priced in. Don't get the CBDC. Get the real encrypted stuff. No, it's gonna be, you know, the stuff that you're gonna use to buy coffee and stuff like that. It's gonna be CBDC, central bank decentralized coin. You think 100 is priced in, Sagar? I don't think 100 is priced in. I think 0.75 is priced in. But, you know, Sagar might have other opinion, of course. And, you know, I respect that. Trust when the bond markets are saying over any news. Yeah, we should also probably follow the interest rate, you know, charts, and the bond charts, and, you know, the market charts, and the you know, oil charts, and let's see some other charts, guys. We forgot to look at other charts. We haven't done that in a while. As you can see here, we are bouncing really nicely off of this this trend line towards upside. So this hasn't still broken anything or anything like that right now. It looks very nice, but you know, it can definitely continue going towards upside. We still haven't broken the trend. The trend is still towards upside, unfortunately, and we're gonna see how much this can actually pump. We're gonna see how much this can actually pump. Are we gonna do another move like this up here and then down? I don't know, guys. I don't know. But dollar is still on the way towards upside, meaning, you know, everything else is getting devalued. Yes, I read when I asked, but it says the most trades are pricing in 100. If traders are pricing in 100, it's gonna be 0.5. Besides that, let's see how this ESP 500 is working right now, hitting the resistance on the head. Are we right now gonna drop down? Or are we gonna break this towards upside? Big questions to be answered. Let's look at a weekly time frame up here, already hitting the resistance on the head. Let me see some kind of moving averages up here. We actually managed to close above the 20 moving average, and right now we're staying above the 20 moving average up here very nicely. Still haven't broken the trend up here. Let me see up here. Now, still haven't broken the trend, so we are hitting the resistance on the head. We still haven't broken towards the upside, but just maybe, after this meeting up here, we're gonna bounce towards the upside, guys. That might be super stupidly bullish for Bitcoin, right? So if you start bouncing, if the Fed news comes out and you know, 0.5, 0.2, whatever, right, this might actually explode towards the upside, because right now we are sitting at resistance. On the other hand, if it's bearish, straight down to the 200 moving average, straight down, no stops until 200 moving average. Let me see some other coins up here. Dollar, I was calling for dollar down to I'm calling for dollar down to 14, 15k down here on the bottom side. Let me just clean up a little bit up here. I'm calling for the dollar down to the 1500, 1400, give or take, down here, you know, in this range down here. Where is it? Yeah, give or take, in this range down here. I'm calling for the gold to go even more towards downside. So I'm looking more downside for the gold. It can definitely hold this you know, weekly 200 moving average up here and bounce. But from, you know, looking at the monthly time frame up here, this you know, this looks like a extend SMAC hug. You know, and just like Bitcoin, this move towards the upside down pattern right now. So as soon as it actually starts breaking this on downside, I'm expecting to go all the way down. It can stop at 50 moving average up here, get some kind of support and continue towards the upside, but it can also break this down and, you know, hit this 50 moving average up here in the next year or something like that. So gold can definitely go down more, right? It can definitely hit this, you know, this 200 moving average. So I think gold is still on the way towards the downside. Oil right now is 105. Let's see oil up here. I thought also oil might actually do the same move up here towards the upside and then drop down. So I do think still that oil might actually drop on the downside over here. So, you know, gold and oil, I think they have more room to drop. But, you know, right now you can see here gold is this on the daily time frame, weekly time frame, hitting this 50 moving average. So it's still some kind of option, right? It's still some kind of option, so we're gonna see if it actually can manage to get it back on track. But oil also looks like it might just, you know, consolidate up here and then, you know, drop on the downside. So there's that, you know, gold, oil and stuff like that. Silver, long time since I checked the silver as well. Up here right now back at 18. It's just taking very too long time. I think also, let me see on the monthly time frame up here. So monthly time frame up here, we are hitting some kind of very low levels on silver down here at 100 moving average. Whether that's interesting or not, I don't know. Not really that excited about you know, gold and silver, unfortunately. John in the house, John Baker. You back? I'm late. This is gold chart, not dollar. Recession coming very hard. Yeah. So I thought it was very funny. I'm gonna show you something. I thought it was very funny. On Twitter, I'm gonna show you, and I'm right now 100% sure that we are going that this is a recession. Let me see up here. This guy, he posted yesterday a clip. So this is a clip from Disclose TV, and we're gonna put this max on and there so you can hear this. This is Biden economic advisor. 2 negative quarters of GDP growth is not technical definition of recession, which is actually technical definition of recession, right? You know, we got technical definition and we got, you know, analytical definition of recession, right? Where you get analysis, but the technical definition, right? Then you have some kind of numbers, something needs to happen, and when that happens, you have the, you know, and the 2 negative quarters, that's been, you know, the thing that's everybody been talking about for, you know, for ages. 2 negative quarters is by definition a recession, right? Now they see that that's gonna happen, and they're saying that 2 negative quarters of GDP is not technical definition. And he's trying to explain to people that they got this, you know, company, there's a company that's doing analytics, and when they decide that it's a recession, then it's recession. So 2 quarters, not recession. When some guys in some building decides recession, then it's recession. I want you to listen to what this guy says. It's funny. I think it's funny. I think it's funny. And before we do that, you have to remember, when these people say stuff like this, when they try to calm people down, because what he's doing something, you know, he's not going out, it's recession, you know, no, they're not gonna do that. Of course, they don't want to start panic or whatever, like, it's normal things. But when we try to always to read between the lines, and we know when they do stuff like this over here, right, then you know we are going into recession. Okay, check it out.
Many of you have reported on. As Secretary Yellen said on Sunday, 2 negative quarters of GDP growth is not the technical definition of recession. It's not the definition that economists have traditionally relied on. There is an organization called the National Bureau of Economic Research, and what they do is they look at a broad range of data in deciding whether or not a recession has occurred. That is the problem.
There is an organization that's going to decide whether a recession has occurred or not. You and me cannot decide whether we are in a recession. You know, the technical definition doesn't apply anymore. The thing that everybody has been, you know, talking about for ages about recession. Now, he might be right that, you know, maybe economists, I don't have that much, you know, knowledge about these cases, but from what I can see and from what I can read, the 2 negative quarters of GDP growth is the technical definition of recession. Like every single, you know, economist that I've been listening to that's been talking about recession and stuff like that has not, I said, like, yeah, 2 quarters recession, right? 2 quarters recession. So when he says stuff like this, he's trying to calm people down because they know they're going to get 2 quarters. So they're trying to say it's not recession. They try to soften the blow. So you know that we are in recession, guys. Read between the lines. RMU 22, quick change of fiat. They are redefining all the significant definitions just like they did with the work time. Yeah, so they might be redefining this recession stuff as well. I don't know what they are doing, but you know, we don't know what they are doing, but we try to read between the lines and, you know, figure our way through that, because that's what, you know, guys, we are small fish. We are not whales. We are small fish. We don't have insider information. We don't have rich and powerful friends. We don't have politician friends. We don't have, you know, a beautiful 10 girls that are going around and giving us info from all of these other guys. You know, the only thing we can do is read between the lines, read the body language, read between the lines, look at, you know, what they are doing contrary to what they are saying. That's the only way we can try to figure out what the heck is going on, right? And when they do stuff like this, you know, that's a small clue that something is up, right? So I thought it was funny. I thought I should show you that. Apply to your lives and your own history and community should be enough. But recession time, most money is made. When the Fed admits we are in recession, is usually a sign we are coming out of recession. Yeah, exactly. So by the time they actually say, okay, it's a recession, you're already deep down. So, you know, it doesn't hurt to know that, you know, we are getting some kind of top. We are getting, you know, in some kind of recession. A pretty good idea what that's like they did with inflation. Yeah, it's not inflation. Inflation is not happening. Yeah, 2% is not inflation. 4% is not inflation. 6%. Yeah, maybe it's inflation a little bit, you know. I don't know. Okay, it's inflation, but by that time you are at 20% or something like that. You know, so what they are saying and what they are doing, it's not the same thing, right? It's not the same thing. So you guys, if you want to figure out what's going on in finance and stuff like that, you gotta learn how to read between the lines. Now, we already knew that we are going down towards downside, right? I'm calling tops for history book 4007, 4000, 3006, and this is when we already have been, because I didn't just, you know, this call over here is not purely based on technical analysis itself. If it was purely based on technical analysis itself, then I would say, okay, this is some kind of top, but it might bounce pretty hard. But we call the top up here because we are expecting the recession, we are expecting inflation. I still expect deflation. So maybe I'm wrong about that. But the reason we have been expecting that is because we can read between the lines, right? So we need to read between the lines. We need to see what they're saying versus what they are doing, what stuff is happening. You know, we don't just trust people because, you know, because they have a high position in government, something like this. We don't do that, right? We try to, we try to think like, be a little bit, restricted, like always, ask questions like, Are you sure about the recession, man? Are you sure about that? Are you sure we're not in the recession right now? So, you know, the reason I actually calling up here, because we have been expecting the, you know, the downfall of the markets for a long time. And right now everything has been unfolding, and as soon as the technicals started pointing towards downside certain tops, we are able to call it, right? But it has a lot to do with, you know, reading between the lines. First they print money, then they increase the rates. No, actually they're quite open about what they're doing. I'm not quite sure about it. They might be open through some channels, but, you know, when it comes to, you know, mainstream media, they're not open at all. Just need to find a place where they're actually speaking openly about what I'm doing. Yeah, but they're not open about, you know, in mainstream media. So I'm just trying to tell you, you know, most people are watching mainstream media. Like, yeah, you know, you gotta watch what they're doing. And if you watch if you learn how people behave in media, so when they say like stuff like, you know, it's not inflation, and you see the price go, you know, prices goes towards up, it's not inflation, and, you know, inflation is going through 5, 6, 7%. It's not inflation, but you know, everything is, you know, people are getting worse and worse economy. You know, you got to start asking questions. Are these you know, people in politics, you know, do they even know what they're doing, you know? So there is that. You know, we won't go into too much that's politics kind of stuff, but it's really, you know, for your financial beings, you know, for your financial status, you know, if you own a house, if you own gold, if you own this, if you own that, if you have assets, if you have liabilities, you know, and for this kind of stuff, it's important to be to not you know, listen blindly to anybody. It doesn't matter whether that's the government, whether that's the economical, you know, some kind of institution, whether that's your friend, your mom, you know, don't listen blindly to people. Always try to figure out the motives behind that. Try to figure out like what's really going on, and what your friend of your mom is doing, and saying, is this actually correlated or not, right? Some person, George, come on, tells nicely. People are so stupid. 60k bits is a hedge against inflation, and 20k, are you crazy? I'm buying. Look at inflation. Yeah, exactly. People, yeah, but that's actually the way it goes. Like people need some kind of, and I have been like that, you know, for a long time. Like you always need some kind of confirmation that the price is going up. But by the time confirmation comes, you're already at the top, right? And the same things that you see right now. You know, people always need some kind of confirmation that inflation is happening, right? By the time the inflation already happened, you know, and confirmation is there that, you know, minus 10%, you know, plus 10% inflation, by the time that actually happened, okay, now it's inflation, it's already kind of almost over, right? It's already kind of almost over, right? So people always need some kind of what am I gonna say? Some kind of confirmation for things. And this also goes to technical analysis. I'm gonna explain to you. So right now, when we are going down, people need some kind of confirmation that, you know, we're going down, we're going down lower, and when you get to the bottom, oh, we are going lower, right? You know, so we always have to anticipate what's gonna happen next. And I think this is one of the big lessons that you guys and me as well can actually learn, anticipating what's gonna happen next, right? So I remember having a chat with Mladen in the Telegram chat, you know, we said a few lines that you know, any kind of line, any kind of what people teach you all the time. If you watch technical analysis videos and watch, you know, how to draw trend lines, what to do with trend lines, you'll see that they will say it every single time that a trend line is a line that has 3 touches on it. 1, 2, 3. This is a confirmed trend line, right? And what we've come to conclusion is that waiting for this 3rd touch to be confirmed, you actually already missed the trade. Because you cannot wait for confirmation. So what do? We wait for 2 touches, right? You have 1 touch, 2 touch. 2 touches create a line. This over here, this last move towards the upside up here, this is anticipation. We are betting on anticipation that's either gonna get rejected, that it's gonna bounce. We are not waiting for actually to get rejected to get confirmation and then waiting for the 4th move to actually short. Anticipation is what gets us the moves, right? We are anticipating something's gonna happen, right? We are anticipating inflation. We are anticipating. You have to be ahead of the curve. You cannot wait for confirmations, right? So we have seen 2 touches. 2 touches create some kind of line. It's not confirmed trend, but we can anticipate based on other indications and stuff like that, that just maybe this is going to be rejected, and that's going to create a trend line. That means that this is going to create a channel that we can trade up here. But by the time you have 3 touches on the both sides, by the time you have 3 touches on the both sides, right, this is already confirmed trend, and you know, right now you can no longer trade it because this can break down and up anytime right now, right? So, you know, anticipation is very, very important. Is what's going to happen next. See it at television. If it's not TV, it must not be true. If it's on TV, that's confirmation. Yeah, TV is mostly confirmation. But you know, I always say people are not actually people cannot, guys. People cannot, you know, do all of this stuff, right? People cannot. If you are not 100% like us inside into this, you know, financial stuff, you cannot actually know what's going on, because people don't have time, or you know, to read the news all the time, to figure out, to talk to people, to go watch YouTube channels just about, you know, finance, recession, this, inflation, this, you know, housing market, you know, car market bubble, whatever, right? They don't have time to. They got kids, they got jobs, they got you know, economic problems, they got girlfriend problems, they got all kind of problems. People got all the other interests like painting, you know, building, this, that, you know. People don't have time to figure out what's gonna happen, you know, in finance. They look at it, and the only place they can actually get and the information from is the guy, you know, is TV, is news, and they have to trust this information because they have nowhere else to get the information from. So there's that. It's a big club, and we ain't in it. Yeah, I think we're gonna end with that, guys. It's a big club. We ain't in the club. The only thing we can do is try to read between the lines. With that said, you know, how the Fed meeting is gonna go today or not, I don't know, guys. I don't know, but you know, we're gonna continue following that. And you know, I think it just might be very, very volatile if it's 0.75. Just know that. Okay, guys, I hope you found this interesting. I don't know if you want me to go over. Let's see. Did we have we have a 4-hourly close in 5 minutes? Now, you know what, it looks like it's gonna close below that, so we're gonna wait for that. But after the 4-hour close, trading today, yes, there will be trading today. There will be trading actually right after this stream. We're gonna wait after the 4-hour close. We're gonna check out here if we get, because right now we're getting rejected. We might get rejected for a second time, something like that. We're gonna check that out. There is this might actually just break towards the upside and get some kind of retest. We might also long the retest. We're gonna see what's gonna happen here. Right now we have the resistance, so we, you know, we can technically just short this. We cannot actually long this, but I think it's gonna wait like this until, you know, next 4 minutes. It looks like it's gonna close below the supports. I'm a little bit unsure whether this is just gonna dump on the downside right now, or is it gonna go all the way up to the top. If it goes all the way up to the top, we got some kind of like 2-3% move towards the upside. That means alts are exploding. So we're gonna try to find some kind of alts that are actually doing well. I used to be anti-finance snob. Bitcoin to 30K end of July. I hope you, man. Amar, love you too, man. Okay, guys, that said, thanks for stopping by. 9 a.m. Central European time on the dollar. We're gonna do the show tomorrow as well. Monday to Friday, we do the show every day. Hit the like button on the way out. I don't ask, you know, for likes once you come in, but after the show, it's nice to get some kind of recognition, you know. So hit the like button after you leave on the way out, and join KuCoin, guys. Ignore the FUD. Join KuCoin. Get the gems. I'll see you later today, guys. Bye bye. Where's the music? I can actually do this, guys. I can actually do this before I actually go. I can actually do this up here. I can do this, click that, click this over here, put this there, click it like this up here, and with that, guys, with that, we say bye-bye.